Berlin's Big Bazooka, a seismic shift in European defense and finance. Germany's impending shift in fiscal policy has sent shockwaves through European financial markets, triggering a dramatic surge in industrial stocks and a parallel spike in borrowing costs. The catalyst? A landmark agreement to significantly relax the nation's stringent debt brake rule, paving the way for a massive injection of funds into defense spending. This bold move, dubbed by some as a big bazooka, marks a profound departure from Germany's traditionally austere economic approach, ushering in an era of unprecedented investment in military capabilities. The announcement follows a broader European trend towards increased defense spending. The EU unveiled a plan on Tuesday aiming to unlock nearly €800 billion, £670 billion, for defense bolstering, a significant commitment to strengthening the continent's collective security. This initiative comes on the heels of the UK government's announcement last week, committing to raise defense spending from 2.3% of GDP to 2.5% by 2027, 2 years ahead of schedule, representing an additional annual investment of £6 billion. The ripple effect across the arms industry has been immediate and dramatic. Shares in Rheinmetall, the prominent German automotive and arms manufacturer, soared by 7.2% on Wednesday alone, adding to an astonishing 99% increase year-to-date. The momentum isn't confined to Germany. Britain's BAE Systems has seen a remarkable 41% surge in its share price this year, while Italy's Leonardo boasts a 73% increase, and France's Thales a staggering 78% rise. These figures paint a clear picture of investor confidence in the burgeoning European defense sector. This seismic shift in German economic policy represents a dramatic break from years of unwavering adherence to strict government debt limits. Chancellor-in-waiting, Friedrich Merz, boldly declared on Tuesday that defense spending exceeding 1% of GDP would be exempted from the country's debt brake rule. This statement echoes the resolute tone of Mario Draghi, the former European Central Bank president, during the Eurozone debt crisis, with Merz echoing Draghi's famous pledge to do whatever it takes, albeit in the context of bolstering national defense. The scale of Germany's commitment is nothing short of transformative. Analysts at Morgan Stanley estimate the total cost of the plan could exceed €1 trillion, underscoring the magnitude of this unprecedented investment. Deutsche Bank economists have described the deal as one of the most historic paradigm shifts in German post-war history, a testament to the profound implications of this policy reversal. For decades, Germany's Schuldenbremse, or debt brake, introduced in 2009 by Angela Merkel in the wake of the global financial crisis, has been synonymous with its fiscally conservative approach. This constitutional rule, typically limiting annual federal borrowing to 0.35% of GDP, has served as a cornerstone of German economic policy, embodying its commitment to fiscal prudence and stability. The decision to effectively sideline this rule for defense spending marks a radical departure from this established paradigm. The implications extend far beyond the defense sector. The relaxation of the debt brake, while primarily focused on defense, raises questions about the government's broader fiscal strategy and its potential impact on other areas of public spending. The increased borrowing required to fund this ambitious defense program will inevitably put upward pressure on German borrowing costs, a trend already evident in recent market movements. This could have knock-on effects across the European economy, influencing interest rates and investment decisions across the continent. The Big Bazooka approach signifies not only a significant increase in defense spending, but also a fundamental reassessment of Germany's economic priorities in the face of evolving geopolitical realities. The decision represents a willingness to prioritize national security and international alliances, even at the cost of adhering strictly to previously sacrosanct fiscal rules. This shift underscores the growing recognition of the need for robust defense capabilities in an increasingly uncertain global landscape. The long-term consequences of this momentous decision remain to be seen, but its immediate impact on European financial markets and the defense industry is undeniable. The coming years will reveal the full extent of this paradigm shift and its lasting influence on Germany's economic trajectory and its role in European security. The increased spending, though initially focused on defense, could potentially spill over into related sectors, stimulating economic growth and creating new employment opportunities. The balancing act between national security, fiscal responsibility, and economic growth will be a defining challenge for Germany's future policymakers. The debate about the optimal balance between these competing priorities will undoubtedly continue as Germany navigates this new chapter in its economic and geopolitical landscape. The potential for both positive and negative consequences makes this a pivotal moment in German and European history, one that will be scrutinized and debated for years to come.